Well, I woke up Saturday morning and I saw the news flash across my screen. U.S. forces had captured Nicolas Maduro in Venezuela. And I'll admit, at 94 years old, I've seen a lot of things in my lifetime, but this one caught my attention. Not because of the military operation itself, though that was certainly dramatic, but because of what President Trump said immediately afterward. He said American oil companies are going in. They're going to spend billions of dollars rebuilding Venezuela's oil infrastructure. And suddenly, every major energy stock started moving. Chevron up 7% in pre-market trading. Exxon up 4%. Halliburton, SLB, Baker Hughes, all surging between 7 and 9%. And I thought to myself, this is one of those one of those rare moments when geopolitics and economics collide in a way that creates real opportunity. But here's the thing, and this is what I want to talk to you about today. Most people who saw those headlines probably got excited and rushed to buy energy stocks without really understanding what's happening here. They saw the gains and they wanted in. That's human nature. But if you're going to invest your hard-earned money, you need to understand the full picture. You need to know what you're buying and why. So let me walk you through this Venezuela situation, explain what it really means for the oil industry, and most importantly, tell you exactly which 3 stocks I think represent the best opportunity right now. First, let's talk about what Venezuela actually has. Venezuela sits on the world's largest proven oil reserves. 303 billion barrels. That's not a typo point, 300 billion barrels of crude oil, which represents about 17% of all the oil reserves on the entire planet. To put that in perspective, Saudi Arabia, which everyone thinks of as the oil capital of the world, has 267 billion barrels. Venezuela has more. Now, you might be wondering, if Venezuela has so much oil, why haven't we been hearing about them as a major player in global energy markets? Well, that's because of what happened over the last 25 years. When Hugo Chavez came to power in 1999, he nationalized the oil industry. He kicked out the foreign companies, the ones with expertise and capital, and he put the Venezuelan government in charge through a state-owned company called PDVSA. And what happened after that? Production collapsed. Venezuela used to produce 3.5 million barrels of oil per day back in the late 90s. Today, they're producing less than 1 million barrels per day. Less than 1% of global oil production. The infrastructure deteriorated. The refineries broke down. The pipelines leaked. The expertise left the country. It was a disaster, a complete disaster. But here's where it gets interesting. That oil is still there. Those 300 billion barrels are sitting underground, waiting. And the infrastructure, even though it's badly damaged, it can be rebuilt. The question is, who's going to do it? And how much is it going to cost? And how long is it going to take? According to PDVSA's own estimates, it would take about $8 billion just to get the infrastructure back to where it was in the 90s. But realistically, we're probably talking about much more than that. Trump himself said billions and billions of dollars. Some analysts are saying it could take 20 billion or more over the next decade. Now, here's what makes this opportunity unique. The United States just conducted a military operation to remove the government that destroyed Venezuela's oil industry. And President Trump has made it very clear that American oil companies are going in. He said it explicitly. The biggest oil companies in the world are going to Venezuela to fix the infrastructure and start producing oil again. This isn't speculation. This is stated policy from the President of the United States. The question becomes, which companies are going to benefit from this? And that's where we need to be smart. We need to look at who has the capability, who has the experience, who has the relationships, and most importantly, Who has the financial strength to make this kind of massive investment in a country that's still politically unstable? Let me tell you about the first stock, Chevron. Now, Chevron is the obvious choice here, and sometimes the obvious choice is the right choice. Chevron is currently the only major U.S. oil company operating in Venezuela. They never left. Even when things were terrible under Maduro, even when other companies pulled out, Chevron stayed. They've been operating in Venezuela for about 100 years. Think about that. 100 years of experience in this country. They know the geology. They know the oil fields. They know the people. They know how things work. And right now, they're producing about 140,000 barrels per day in Venezuela, which might not sound like much, but it gives them an enormous advantage. When Trump talks about sending American oil companies into Venezuela, Chevron is already there. They don't need to start from scratch. They got infrastructure in place. They've got relationships. They've got operations that are currently running. On Monday morning, when the markets opened, Chevron stock jumped 7%. And in pre-market trading, it had surged as high as 10%. Why? Because investors understand that Chevron is positioned better than any other company to benefit from this situation. If the U.S. government lifts sanctions fully, if stability returns to Venezuela, if billions of dollars of investment flow into the country's oil sector, Chevron will be the primary beneficiary. They're first in line. Now, I want to be clear about something. Chevron at current prices is not cheap by traditional metrics. It's trading at a price-to-earnings ratio of about 21. That's not a bargain. But here's what you need to understand about oil companies. You can't evaluate them based on current earnings when oil prices are low. You have to think about what they'll earn over a full business cycle. Oil prices are cyclical. They go up and down. Right now, we're in a period where oil prices are relatively low. West Texas Intermediate is trading around $57 per barrel. Brent crude is around $60. Those are not high prices. In fact, 2025 was the worst year for oil prices in the last 5 years. Prices fell about 20%. But that's exactly when you want to be buying. When prices are low, when sentiment is negative, when other people are scared. That's when you get the best opportunities. And here's the thing about Venezuela. If American companies successfully rebuild that country's oil infrastructure, if production goes from 1 million barrels a day back to 3 million or even more over the next decade, Chevron is going to be making enormous amounts of money. We're not talking about small returns. We're talking about a potential game changer for the company. So yes, Chevron is the first stock I'd be looking at. Not because it's cheap right now, but because it has the strategic position that no other company can match. The second stock I want to talk about is one that a lot of people might not think about immediately, but it's actually just as important as Chevron, maybe more important in some ways. And that's Halliburton. Now, Halliburton is not an oil producer. They don't own oil fields. They don't sell crude oil. What they do is provide services to oil companies. They're what's called an oil field services company. And what does that mean? It means they're the ones who actually do the work of extracting the oil. They drill the wells. They provide the equipment. They do the hydraulic fracturing. They do the cementing. They do all the technical work that's required to get oil out of the ground. And here's why that matters for Venezuela. Remember what I said about Venezuela's infrastructure being badly deteriorated. Remember how I said it would take $8 billion or more just to repair what's broken? Well, who do you think is going to do that work? It's not going to be Chevron's employees. It's not going to be Exxon's employees. It's going to be companies like Halliburton. They're the ones with the technical expertise. They're the ones with the equipment. They're the ones who know how to rehabilitate damaged oil fields and get them producing again. On Monday morning, Halliburton stock jumped 9%. And that's not a coincidence. Investors who understand the oil industry know that if billions of dollars are going to be spent in Venezuela, a huge chunk of that money is going to flow to oil field services companies. Every well that gets drilled, Halliburton gets paid. Every pipeline that gets repaired, Halliburton gets paid. Every piece of equipment that needs to be installed, Halliburton gets paid. It's a direct play on the reconstruction of Venezuela's oil industry. And here's another thing to consider. Halliburton's business is not just limited to Venezuela. They operate all over the world. So even if the Venezuela situation doesn't develop as quickly as some people hope, even if there are delays or complications, Halliburton still has a strong underlying business. They're not betting everything on Venezuela, but Venezuela represents a massive potential upside for them. A completely new market that could generate billions of dollars in revenue over the next decade. Now, I've always believed in investing in companies that provide essential services. Companies that are needed regardless of who owns the oil fields. And that's exactly what Halliburton is. Whether it's Chevron operating in Venezuela, or Exxon, or ConocoPhillips, or whoever else, they're all going to need Halliburton services. That makes Halliburton a safer bet in some ways than betting on any single oil producer. The third stock, and this one might surprise some people, is ExxonMobil. Now, Exxon doesn't currently have operations in Venezuela. They pulled out years ago during the Chavez era. In fact, Chavez nationalized Exxon's assets, and Exxon spent years fighting for compensation. They claimed they were owed billions of dollars. Eventually, they received some compensation, but it was much less than what they believed they were owed. So why am I talking about Exxon? Because Exxon is the largest, most financially powerful oil company in the world. And if there's going to be a massive reconstruction effort in Venezuela, if billions of dollars are going to be invested, Exxon has the capability to do it better than almost anyone. They have the technical expertise. They have the financial resources. They have experience operating in difficult environments all over the world. And most importantly, they have a score to settle with Venezuela. On Monday, Exxon stock rose 4%. That might not sound as dramatic as Chevron's 7% or Halliburton's 9%, but Exxon is a much larger company. A 4% move in Exxon represents billions of dollars in market capitalization. And here's what I think a lot of people are missing. Yes, Chevron has the advantage of already being in Venezuela, but Exxon has advantages too. They're not tied down by existing operations that might be constrained by old agreements or limited concessions. If the U.S. government is restructuring Venezuela's entire oil industry, Exxon could negotiate for the best fields, the best terms, the best opportunities. They're starting with a clean slate. And let me tell you something else about Exxon. This is a company that thinks long-term. They don't chase short-term opportunities. They invest for decades, not years. If they're going to go into Venezuela, they're going to do it right. They're going to build infrastructure that lasts. They're going to develop fields properly. They're going to create value that compounds over time. That's how Exxon operates. That's their culture. That's their history. Now, I want to be very clear about something. I'm not telling you to rush out and buy these stocks tomorrow morning without thinking. I'm not saying put all your money into energy stocks based on one weekend's news. What I am saying is this situation in Venezuela represents a real, significant, long-term opportunity in the energy sector. And these three companies, Chevron, Halliburton, and Exxon, are positioned better than anyone else to benefit from it. But you need to understand the risks too, because there are always risks. First risk, political instability. Just because the U.S. that removed Maduro doesn't mean Venezuela is suddenly stable. There's still uncertainty about who's going to run the country. There's still potential for violence, for protests, for political chaos. And if that happens, if the situation deteriorates, these investments could be delayed or even canceled. Second risk, oil prices. I mentioned earlier that oil prices are currently low, and that's actually good for buying these stocks now. But if oil prices stay low for a long time, if we enter a prolonged period of oversupply in global oil markets, these companies' profitability will be constrained. Venezuela's heavy crude is expensive to produce and refine. If oil prices are at $50 or $55 a barrel, the economics don't work as well as they do at $70 or $80 a barrel. Third risk, timeline. Rebuilding Venezuela's oil infrastructure is not going to happen overnight. It's going to take years, possibly a decade or more, to get production back to where it was in the 90s. So if you're investing in these companies based on the Venezuela opportunity, you need to be patient. You need to be prepared to hold these stocks for 5 years, 10 years, maybe longer. This is not a trade. This is an investment. But here's why I think it's worth it. Here's why I think these risks are manageable. Because even with all the uncertainty, even with all the potential problems, the fundamental equation is simple. Venezuela has the world's largest oil reserves. The United States has the world's most capable oil companies. And those two things are now being brought together in a way that hasn't been possible for 25 years. That's a big deal, that's a historic opportunity. Now, let me talk about how I would approach this if I were investing my own money. And I want to be very specific here because I think it's important to have a clear strategy. If I were going to invest in this Venezuela opportunity, I wouldn't put all my money into one stock. I would split it across all three. Maybe 40% in Chevron, 30% in Halliburton, 30% in Exxon. Why that allocation? Because Chevron has the most direct exposure. They're already there. They're going to benefit immediately. But Halliburton and Exxon provide diversification. Halliburton gives you exposure to the entire reconstruction effort, not just one company's operations, and Exxon gives you the potential upside of a major player entering the market with huge resources. And then I would do something else that's really important. I would set a timeline. I would say to myself, I'm buying these stocks for the next 10 years. I'm not going to panic if they go down 5% or 10% in the short term. I'm not going to sell if there's bad news out of Venezuela next month or next year. I'm investing in a long-term opportunity, and I'm going to give it time to develop. Because that's how real wealth is built. Not by trading in and out, not by trying to time the market, but by identifying genuine opportunities and having the patience and discipline to let them play out. You know, I've been investing for over 70 years now. And I can tell you, the best investments I've ever made were not the ones where I tried to be clever or fancy. They were the ones where I identified a simple, fundamental advantage, and I stuck with it. American Express in the early 60s during the salad oil scandal. Everyone thought the company was finished, but I knew the brand was valuable. I knew people loved their credit card, so I bought heavily and I held. Coca-Cola in the 80s. Everyone knew Coca-Cola was a great company, but the stock got cheap for a while. So I bought and I held. Bank of America during the financial crisis. Everyone was terrified of banks, but I knew the American economy would recover. So I invested and I held. The Venezuela situation reminds me of those opportunities. Not because it's exactly the same, but because the pattern is the same. You have a valuable asset, in this case 300 billion barrels of oil. You have a temporary problem that has suppressed that value, in this case 25 years of mismanagement and political dysfunction. And now you have a catalyst that could unlock that value, in this case U.S. intervention and massive investment. That's the kind of setup that creates real wealth over time. But you have to be smart about it. You have to do your homework. You have to understand what you're buying. That changes the risk profile dramatically. When Chavez nationalized the oil industry, American companies had no recourse. The U.S. government imposed sanctions, but that was about it. This time, the U.S. is not just imposing sanctions. They conducted a military operation. They removed the government that was hostile to American business interests. And they're making it clear that Venezuela's oil resources are going to be developed in a way that benefits American companies. That doesn't eliminate all risk. Nothing eliminates all risk, but it significantly reduces the political risk compared to what existed before. And let me tell you something else. In my experience, the best opportunities always come with some level of risk. If an investment is completely safe, if everyone agrees it's a sure thing, the price is probably already high. The opportunity is probably already priced in. But when there's uncertainty, when there's fear, when other people are hesitant, that's when you can get attractive prices. That's when you can make real money. Look at Chevron. The stock jumped 7% on Monday. That's a big move. But you know what? I think Chevron could be worth 30% or 40% more than today's price 5 years from now if the Venezuela situation develops well. Same with Halliburton. Same with Exxon. These aren't small opportunities. These are potentially life-changing investments for people who get in early and have the courage to hold through the inevitable volatility. Now, before I wrap this up, I want to give you some specific action steps. Because information without action is worthless. You need to know what to do with what I've told you. First, if you're interested in this opportunity, do your own research. Don't just take my word for it. Go read Chevron's annual report. Go read Halliburton's investor presentations. Go read about Venezuela's oil reserves and the technical challenges of producing heavy crude. Educate yourself. Understand what you're investing in. Second, if you decide to invest, start with a position you're comfortable with. Don't bet your entire portfolio on this. Don't put money in that you're going to need in the next year or two. Invest an amount that you can afford to hold for the long term, through ups and downs. Third, once you invest, be patient. Don't check the stock price every day. Don't panic if there's a bad news cycle. Remember, you're investing in a 10-year opportunity, not a 10-day trade. And finally, stay informed. Pay attention to what's happening in Venezuela. Read the news. Understand how the political situation is developing. Because if things start to go wrong, if the reconstruction effort stalls, if violence breaks out, you need to be prepared to reassess your investment thesis. But if things go right, if American companies successfully rebuild Venezuela's oil industry, if production increases from 1 million barrels a day to 3 million or more, these three stocks could be some of the best performers in the energy sector over the next decade. You know, at 94 years old, I've learned that the biggest opportunities in life often come disguised as problems. The best investments often look risky at first. And the greatest wealth is built by people who have the courage to act when others are paralyzed by fear. The Venezuela situation is exactly that kind of opportunity. It's messy. It's complicated. It's uncertain. But for investors who understand what's really happening, for people who are willing to do the work and have the patience to see it through, I think this could be one of the most significant investment opportunities in the energy sector in decades. So that's my take on Venezuela. That's why I think Chevron, Halliburton, and ExxonMobil represent the three best ways to profit from this situation. I'm not saying it's guaranteed. I'm not saying it's without risk. But I'm saying it's worth serious consideration for anyone who's looking to invest in the energy sector over the next decade. Good luck out there. And remember, the best investments are always the ones that require courage today and patience tomorrow.